Our guest for today on Buy Now Sell Now, we have Mandar Jamsandekar as well as Ashish Kapur joining us this morning. Good morning, gentlemen. Thank you for joining us. Mandar, I'll come first to you. What are your top picks for our viewers today?
Good morning. My first pick is Igarshi Motors. See, this stock has gone through a correction in the last few months, and right now is showing signs of strength. Yesterday, the stock managed to break past a resistance which it had at levels of 270.71. Today in the intraday trade, it's managed to cross the next resistance which it had at 290, and it's showing good kind of strength, trading with good kind of volumes. Therefore, I think the stock has got more steam and should be able to rally further. Therefore, a buy in Igarshi Motors with a stop loss at 270 for an upside target of 430. This is a positional trade. And the second trade that I have is Berger Paints. This stock is right now trading range bound between levels of 530 and 490. Therefore, a positional, and right now the stock is somewhere near to the resistance, upper end of the range that it trades. Therefore, a sell with a stop loss at 532 with a target of 490, which is expected to be achieved in the next few days.
Right, those are the picks coming in from Mandar this morning. Good morning, Ashish. What are your wealth creation ideas for our viewers?
Well, I continue to believe that this is a great stock picking market now because indices have rallied and mid-caps have hardly shown any movement. Going forward, I strongly believe that this gap in valuation between the large cap and the mid-cap will certainly narrow to the favor of the mid-caps. So it is a great opportunity to buy quality mid-caps. Keeping this in mind, I have two buy ideas both in the mid-cap space. For first idea is JK Paper. Paper industry fundamentals have really improved. This is one industry where people are actually making good profits, and the outlook is also very bright. JK Paper is one of the best managed companies in this sector. It has a very good ROE, very good operating ratios. With an ROE of 21%, it is clearly the best stock to hold. The profit and revenue growth have been very impressive in the last few years. The revenues have grown at 14% average over the last 5 years, and net profit has grown at 40% CAGR over this period. So with very good, continued growth both in top line as well as bottom line, very good operating efficiency, very nice ROE. This clearly is one of the very good stocks to hold. It also has a good dividend yield of 3%. So put together, this is a great stock. I think the industry itself is doing well, and this is the best stock in this industry, which is growing. So clearly a good stock to buy, and my target here is 175, which gives about 40% upside from the current levels. The second stock is Minda Corp. Now, auto sector is doing bad, but I do believe that at some point we will see some kind of a turnaround. So it's a great time to buy into quality auto ancillary names. Minda Corp is one such name, very well diversified across various products, and most of their products are such that they will not get affected by the new generation improvements, whether it's electric vehicles or any other technology development, because they're basically into plastics and sensors and locks and things like that. And sensors, the demand is definitely increasing as more and more technology is being put into the auto space. The company has managed to keep its head above water despite very difficult conditions. It has corrected from 200 plus levels. And at the current level, I think it's a great entry point to buy into a very well managed and diversified auto ancillary space. Here, my target is 150, which again is about a 50% upside from the current levels.
All right, those are the wealth creation ideas coming in from Ashish. That's JK Paper as well as Minda Corp. But let's get on board with our first email query for the day. We have T. Saxena, who's written to us from Patna. He's saying that he's bought L&T Finance shares at 93 rupees per share. He wants to know whether he should sell or hold the stock for a long haul. Mandar, I'll come to you on L&T Finance. And NBFC firm definitely had a good run up this month. And definitely, if you look at the stock price currently, is definitely higher than the buying price of a viewer. So what should he do? Should he continue to hold on to the stock or should he sell it?
See, I think he should continue to hold. Basically, if you look at the short-term chart for the last 3 months, the stock has been showing strength, and it seems that the correction that the stock has witnessed in the last 2 years is done for now. So, and this happens after the stock bounced back from a good kind of support levels, long-term support levels, which between levels of 80 and 100. So that is a positive. And looking at the short-term chart, the stock looks like it's showing strength, making higher tops, higher bottoms. So 112 is the support for now. He should continue with a trailing stop loss at 105. On the upside, I think in the next few weeks, maybe 2 to 3 months, the stock should be able to trade at around levels of 140 to 150.
All right, around levels of 140 to 150, Mandar believes that the stock can trade going ahead. And the correction, he believes, is done for now for L&T Finance. So for now, his call is that you should continue to hold on to your positions in L&T Finance. Ashish, what's your take on L&T Finance? Do you echo the similar view of Mandar?
Yeah, I agree, because I think within the NBFC space, we have seen a very significant correction. A lot of small players have seen a very big wipeout of their business and net worth. Now, within this space, actually, the better managed companies are Bajaj Finance and companies like M&M Finance or Cholamandalam Finance. L&T really is not my top pick. But having said that, I think it is also a diversified player and has a very strong backing of the L&T group. So I do think that things will improve from here. Certainly not my best choice, but since he's already bought it, there's no harm in continuing to hold on to it. It is certainly better than the average NBFC, but not the best 2-3 names that I can think of. But having said that, yes, things will gradually consolidate and improve from here. So he should continue to hold on. I think in time to come, he should generate a decent profit from here.
Continue to hold on to your positions in L&T Finance is the view coming in from Ashish as well for the particular counter. But let's get on board our next caller for today. We have Ayaz who's calling us from Satara. Good morning. What's your query?
Hello.
Good morning.
Good morning. I have 100 shares of Glenmark Pharmaceutical at the price of 332. And I have 100 shares of Dilip Buildcon at the price of 422. I'm short-term trader. What should I do?
All right. We'll take your queries one by one. First up, we'll take Glenmark Pharma. 100 shares of Glenmark Pharma at 332 rupees per share. Mandar, what should he do? He's a short-term trader. Glenmark Pharma, pharmaceutical company, definitely that particular sector has seen pressure on back of the price erosion in the US markets. But on the short term, how does this particular counter look like?
See, the last 3 years were very bad for the stock. That's the point when the stock from levels of 1250 corrected down to the recent lows of around 280, 270. But I think this negative is in the past now, because the stock has managed to find support on long-term support levels. So the recent lows that the stock made were support levels from where the stock had managed to bounce back in 2011 and 2012, and that's the point when we had witnessed the rally from which took that stock from 300 to 1200. So one positive is that the stock has managed to find support. Now the only thing is, when will the stock move up? Now if you look at the short-term chart, then the stock right now for the last 2 months is trading range bound, has got a support at 320 and has got a resistance at around 370 levels. Once the stock manages to cross beyond 370, that would be a confirmation that a fresh uptrend has now started. So I would suggest him to continue to hold with a trailing stop loss, keep a stop loss at 315. And once the stock crosses 370, we will take a review. And I believe once the stock manages to break past 370, the next target for the stock would be 450 to 460.
Continue to hold on to your positions in Glenmark is a call coming in from Mandar looking at the charts. But fundamentally, Ashish, you think it makes sense to hold on to Glenmark Pharma even if it is for the short term?
Well, short term depends on so many criteria. It's difficult to define what would be short term and how the stock will move. But broadly, I think pharma as a sector has certainly corrected a big way, both time-wise and price-wise. A lot of negatives already in the price. So generally, things should improve from here. Glenmark is one of the better names, certainly in the pharma space. So broadly speaking, yes, you can hold on. Short term, very difficult to say. But on a medium to long term, yes, it's a good time to look at pharma and especially the better managed companies like Glenmark. Having said that, I think for a for a common investor, I think the preference should be given to the marquee names in this. It's a great time actually to look at the MNC pharma names, things like Pfizer, GlaxoSmithKline Pharma, because to some extent, a lot of the halo around the Indian pharma has got tarnished because of the way the US FDA objections are coming every now and then. So really speaking, for a common investor, I think the best place to invest is the MNC pharma, where the growth trajectory is very consistent. Even if the valuation is high, next 3-4 years you'll make a lot of money there for sure. The Indian pharma, you really have to be very careful and keep following the news very carefully. So yes, if you are ready to take that kind of a risk and are that aware as an investor, then certainly look at the stocks like Glenmark Pharma, which have corrected a fair bit from their highs. But remember that these stocks have to be very carefully monitored, and at any juncture where you see any kind of news, you have to then book out of your position.
That's Ashish's view coming in for Glenmark Pharma as well as for the entire pharma space. Mandar, what's your take on Dilip Buildcon? Our viewer has 100 shares of that particular counter at 420 rupees per share. How does the particular chart look? Should he continue to hold on to this particular stock?
Dilip Buildcon last year in 2018 has witnessed a very sharp fall. So from levels of 1200, the stock came down to levels of 300. That was a very sharp fall. And throughout 2019, the stock is trying to create a base. So that is a positive. So for the stock, 375 to 320 is a support. And the stock has managed to respect this level for the last 1 year. So that is a positive. But on the upside, 470, 450 to 470 is also a resistance. So right now, the stock is trading a range bound. Positive is that it's trading on the support, but for upside, the stock has to break past the resistance level. So once the stock managed to break past this resistance at 470, yes, a fresh up move would start. But because the stock is trading on support, you should continue to hold with a stop loss at 310. And as and when the stock managed to come out of this range, as it managed to break past the resistance, we should take a review. And on the higher side, the next resistances are at around 600 to 620. So that should be the target. But watch 470, which is an immediate resistance, and 350 to 320, which is an immediate support for the stock for now.
Right. Hold for now is a call, but coming in from Mandar when it comes to Dilip Buildcon. Ashish, what's your view on Dilip Buildcon? 100 shares at 420 is what our viewer has of that particular counter. Do you think that it makes sense to continue to hold on to this particular counter?
Yeah, I think so, because mid-caps, like I mentioned earlier, I think are due for a rally from here. And so quality names in every segment should do well. And Dilip Buildcon, barring a few news flows which were negative, has generally been a great outperformer over the last several years. And their project delivery, execution, everything is pretty good. The order book is also pretty impressive. So on the whole, I don't see any reason why the investors would not get back his buying price as well as make some money. I think the next few months we should see a good rally coming into these kind of names. So in my mind, it's a great time to not only maybe hold on, perhaps can even look at buying a little more if he has money available for the next 1 year or so. So I think within one year kind of perspective should make money from here, for sure.
All right, so hold is a call coming in from Ashish as well when it comes to Dilip Buildcon. Let's get on board with our next caller. We have Ajit Bunkar who's joining us on the phone line from Pune. Good morning. What's your query?
5875 price there for 500 shares for Ujjivan Small Finance Bank. So wanted to know whether to hold or sell.
58.75 is the price that you bought the stock at, is it?
5875, ma'am. Yes.
All right. Mandar, I'll come first to you. Ujjivan Small Finance Bank, our viewer has bought shares at 58.75 rupees per share. What should he do with this particular counter? Recently listed, saw a stellar listing as well. So what should he do?
Basically, we don't have much of data on the chart. But one thing is he can watch these levels. 51 is a support for the stock, and on the higher side, 63 is a resistance for the stock. So 51 and 63 are levels which he can watch. So the stock is trading between these levels for the last 2 weeks. As and when the stock managed to break past any of these levels, the direction would be decided. So for an uptrend to start, the stock has to break past levels of 63, which is a resistance for now. So watch these levels, 63 and 51. As a stop loss, he can place a stop loss below the support level of 51. So maybe 50 rupees or 49 rupees can be a stop loss for the stock, because if the support is broken, then maybe the stock decides to move downwards. So hold with a trailing stop loss at 49.
Hold is a call coming in from Mandar for now. Definitely is a newly listed firm. He's saying that 51 is a support level for the stock. Meanwhile, 63 is the resistance for the stock. So need to keep a close eye on these levels as well. Ashish, what's your take on Ujjivan Small Finance? Definitely is recently listed, but how are the fundamentals of this particular counter? Make sense to hold on to it?
Well, let me say this, that it is very expensive at the current rates, and for a small bank which is still yet not established in the way some of the other private banks are, it's a very, very expensive valuation. So unless the investor has a lot of patience, is ready to hold on for a number of years for the whole thing to play out, and also has a reasonably good risk taking profile, see, there is a good possibility that the bank will do well and eventually will be a great winner in the portfolio. But at the current price, it is very expensive, and there's also a risk because the bank is yet to establish. So you need to have your definition of holding period very well defined. It should be some investor with no time constraint in mind, and also ready to take some risk, because if the things don't play out, the stock could lose a lot of money from here. Having said that, I think within the private banking space, something like an Axis Bank makes a lot more sense, because it's available at a more reasonable valuation, is established, is coming out of the bad NPA situation. Things are looking much better there. So I think clearly speaking, as a risk reward equation, Axis Bank is much better at the current level than Ujjivan Small Finance Bank. So that is my take. I think I would suggest moving into Axis Bank, unless the investor has a very long period and is ready to take the risk of possibly losing money with the hope of multiplying money over a long period of time.
All right, that's the take coming in from Ashish. Believes that if you can, then rather move on to Axis Bank, which is a better risk reward. It also makes sense among the private banking space, as the valuation is much cheaper than that of Ujjivan, which is currently trading at an expensive valuation. Let's get on board now. Next, we have an email query for us from Dharmaraj from Coimbatore. He's written to us saying that he's bought Oracle shares at 3,300 rupees per share. Also, he has Tide Water at 5,000 rupees per share. No, we don't have the quantum of the shares that he's bought, but these are the two counters that he's purchased. So Mandar, I'll come first to you for Oracle. 3,300 is the buying price for this particular counter that our viewer has. What should he do with his holding? Unclear about how many shares he's holding in the particular counter though.
With weakness now, there is a support around levels of 2,800, currently trades above that level. So that is a positive, but he needs to watch this level of 2,800. As and when the stock starts trading below 2,800, the weakness can deepen further, and that can take the stock down to 2000 levels as well. So watch this level of 2800 till the time the stock manages to trade above it. Continue to hold on the upside. Possibly in the next few months, the stock can move to levels of 3800 to 4000 as well. But for now, watch 2800, which is the support, and keep a stop loss below that level.
To watch out for the level of 2800 for Oracle Fin. Till the time it is actually trading above it, then it is fine. There is scope for the stock to move much higher than that over the next 12 months is the view coming in from Mandar. What's your view, Ashish, on Oracle Finance?
Well, I think reasonably expensive stock. Also, the results in the last quarter were not good at all, were quite disappointing. So I don't am not necessarily bullish on it. It is a very good company, well-established company, but I would think that the current price is not a very great entry point. So perhaps could you look at opportunities to exit and enter on declines. The company otherwise is good, but the valuation and current results and the last few quarter results are not at all encouraging.
Right, the stock is reasonably expensive is the view coming in from Ashish. Earnings were also disappointed. That's why he is not too bullish. But you can look at opportunities to exit the stock. Maybe you can re-enter it at a cheaper valuation is the view coming in from Ashish. Mandar, what's your view on Tide Water? Our viewer has got that particular stock which he's purchased at 5,000 rupees per share. How is the charts looking for that particular counter?
Tide Water for the last 2 years has been drifting sideways and with weakness. 4,300 is a support, and the stock is trading above that level for now. So watch this level of 4,300. On the upside, the stock has a resistance at around levels of 5,200, 5,250. So an up move will start only once the stock manages to break past this resistance at 5,250. But for now, as it trades on support, watch this level. If 4,300 is broken on the downside, then a sure exit, because in that case, the stock can fall down to levels of 3,000 as well. So 4,300 is an immediate level which he needs to watch, track this level till the time the stock manages to trade above it, continue to hold.
Right. Ashish, what's your take on this particular company, Tide Water lubricant firm? Fundamentally looks good. Does it make sense to continue to hold on to this particular counter?
Well, the stock has a good history of value creation, but unfortunately, I haven't tracked it. I really haven't seen the last few quarter results and also the valuation. So I wouldn't like to comment on it. Yes, the only thing is, yes, it has a very good past history of wealth creation. That is all I can say. I really haven't tracked it in the current times.
Ashish has not tracked the stock in the current time. So definitely the stock is a good stock, has given good wealth creation for the investors, but would reserve his views on this particular counter. Let's get on board our next query. We have an email query from Sridhar from Chennai, who's written to us saying that whether he should invest in Reliance Industries as well as SBI at the current levels. Mandar, I'll come to you on Reliance Industry. The stock is near its record levels. Is scope for further upside on the stock? Makes sense to enter the stock currently?
Basically, if you look at the long-term chart, then the stock looks a bit stretched. For the last 3 years, the stock has been continuously in an uptrend. So from levels of 500, 550, the stock has moved up to the current highs of 1600. And therefore, quite possibly right now, as and when the stock tries to move up, there would be profit booking in the stock. I would suggest him to wait for a correction. Right now, if you look at the way the stock has been trading in the last 1 month, it's trading with a support at around 1530, 1540, and on the upside, it has a resistance at around 1600 to 1620. So it's going through a consolidation, and this consolidation would continue for maybe another few weeks. And after that, a fresh invitation would be a best bet to get into a long trade. On the downside, if there is a correction and if the stock slides down to levels of 1500, then that would be a very good price to start accumulating the stock. And I won't suggest him to buy 100% quantity. I would suggest him to accumulate the stock slowly and steadily as and when the stock goes through a correction.
for correction is the view coming in from Mandar, but definitely do not put in all your money at a go. Buy into the stock in a phased manner is the view coming in from Mandar. Ashish, your take on Reliance Industries. Definitely Jio is performing well for the company, is driving the stock, even the retail business of the particular counter. So does it make sense to enter now, or should our viewer wait for some correction and then enter the stock?
Well, there's no doubt it has been a great performer, especially over the last few months, and even the last 3-4 years. This is a great performer on the index. Having said that, I think nearly all the positives are already in the price, whether it is Jio, whether it is Reliance Retail, whether it is a new ventures which they're thinking of, plus the main oil business. I think everything is in the price now. Currently, it is a market favorite. It has done very well. But I don't think this is a great time to enter. Certainly wait for not only a correction, a significant correction before you think of re-entering this stock. To my mind, I think it's fully priced. It has been a great performer, but if you were already holding at low levels, you could continue to ride, but do not enter at these levels. Wait for a significant correction at any point of time before re-entering.
Right, that's the view coming in from Ashish for Reliance Industries. Believes that all the positives are already priced in the price. Don't think that this is a great entry point for the company. Need to wait for a significant correction, not only a correction, but a significant correction is what Ashish is of the view for Reliance Industries, but definitely a good stock as well. On that note, thank you Mandar as well as Ashish for joining us, giving us your take on the markets, also resolving viewer queries. And on that note, we're out of time on this edition of Buy Now, Sell Now. Thank you for watching.